The Chamber of Oil Marketing Companies says Ghanaians should expect cheaper fuel prices this Christmas. A rather exciting one, but also ahead, lithium watchers demand economic logic guides Ghana's new deals to maximize benefits. And those are our headlines for you today here on Business Focus. But as always, Business Focus is sponsored by Telecel as well as EcoBank. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you'd always want to remember: *770#. Yes, *770# is the new EcoBank Money Emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. So dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank. Let's turn our attention quickly now to the currency, commodity, as well as the Treasury bill front before we segue into our topic for today. Well, the dollar currently will be bought from you at 11 cedis 48 pesos, sold to you at 11 cedis 49 pesos. The pound will be bought from you at 15 cedis 37 pesos, sold to you at 15 cedis 39 pesos. The euro will be bought from you at 13 cedis 50 pesos, sold to you at 13 cedis 51 pesos, but be guided that these figures will be much higher at a Forex Bureau near you. We'll go to the commodity front, where the price of cocoa currently is down by some $435. It's trading at $5,844 per ton. Gold is also down by 3.39. Is trading at $4,296 per ounce. Crude oil is also down by 0.81%. Dollars rather, is trading at $60.31 per barrel. Interesting developments across the globe, and countries like Ghana that export or deal in all these three commodities will be quite concerned. But we'll see how the year actually ends for a lot of these commodities. But at least we do know that it's in line with projections that 2026 will see some decline in the prices of a lot of these commodities. On the Treasury bill front, 91-day bill is going at 11.11%. 182-day bill is going for 12.54%. 364-day bill for 12.97%. And we do know that the government has achieved its third consecutive oversubscription over the period. Quite interesting developments after experiencing some more than 7, I believe, under subscriptions, raising concerns there about where investors were putting their money. But of course, if Treasury bill is going for about 12%, while inflation is at about 6%, it's more enticing to the investor community to look that way. But this is Business Focus here on TV3. Let's go for a quick break. When we come back, we'll delve into our topic for today. Stay with us. Welcome back. This is Business Focus here on TV3 with me, Michael Obudu, and just gone past where some tidbits from EcoBank towards planning for your pension. Now, the Chamber of Oil Marketing Companies, COMAC, is projecting a noticeable drop in fuel prices in the next coming days. COMAC indicates that global product prices are trending downward, suggesting that Ghanaians are going to have a very good Christmas in terms of petroleum prices. The sustained drop in crude oil prices on the international market, combined with a period of relative stability in the cedi's exchange rate, is creating favorable conditions for local price reductions. Consumers can expect this trend to translate into lower cost at the pump during the final pricing window of the year. Well, joining me in studio to discuss this particular topic is the Executive Director of the Center for Environmental Management and Sustainable Energy, SEMSE, Benjamin Sia. Thank you so much for joining us.
Thank you, Mark.
All right. Now, it's quite interesting that this is the development we're expecting, because we know that there has been some marginal depreciation in the local currency. So a lot of people were expecting prices to go up rather.
I think that, first of all, I think COMAC should do better in terms of presenting a statement in the petroleum downstream.
Okay.
In Ghana, we don't use crude in certain prices. We use finished product or refined products. Normally, these prices are projected or published by MPA based on bi-weekly periods. So I think that...
but to be fair, at least there's some direct correlation between crude prices and finished product prices, at least. They may be,
but I think that because of the standard that we've practiced in the convention, I think it's always proper to use finished product instead of the crude oil.
Fair point.
Now, I think, yes, you are right in saying that cedi has depreciated by about 2%. But if you look at the magnitude in terms of the decline of the price of finished product on the international market, for example, gas oil or diesel doing around 11%, and then gasoline or petrol doing around 6%. So that huge margin of decline of the price of these products on the international market outweighs the strength of the cedi in terms of its depreciation, and that is why I believe that most of the products, especially diesel, is likely going to see about a 40% drop on its price, whilst petrol sees about 20% drop on its price beginning the second window of December, which also falls into the festive period of December. So as they indicated, Ghanaians will see a bit of sour relief in terms of cost in procuring fuel for their Christmas transportation or Christmas activities.
That's quite interesting. Looking at the drop, I think the previous window was supposed to have seen some upward adjustments, but a number of them stayed their prices. It shows you that there's a lot of competition in the OMC space to the benefit of consumers, don't you see?
Yes, I think that I've always said that the space is very saturated, right? As we speak, we have in excess of 200 OMCs, and each wants to sell in higher volumes. And selling in volumes means that you must be competitive in terms of pricing. And for that matter, any OMC that sells above the industry average, higher above the industry average, is likely going to be pushed out of the market, and those with affordable prices will take over. And I think because of that, the industry is now observing very cost-effective measures by these OMCs to ensure that their margins break even, or maybe their margins are able to outweigh cost or recover costs, and maybe project certain profit margin for them. So I think that that competition is helping in transferring some efficiency from these OMCs to users. And we must commend the MPA, we must commend the OMCs themselves in ensuring that there's that competition, that cost effectiveness, applying various innovative ways, applying technology to ensure that prices are very competitive so that they can stay in business.
Interesting. We have also joining us over the phone Dr. Eric Boache Iadom. He's with the Africa Policy Lens. He's a senior research fellow there, as well as a financial economist with the University of Professional Studies. Doc, thank you so much for your time.
Thank you, Michael, for having me.
Okay, great. Now, Doc, it's quite interesting that we are seeing some, expecting some windfalls for consumers at the port. But it also raises the question that what happens to us when prices begin to spike? It therefore suggests that we should have some more practical approach to sustaining prices at the pumps. Don't you agree?
Yes, generally you can say that this year the exchange rate has been managed very well, and the city has largely performed well. I think that the government has done well. But for the one city levy that the government charged in July, I think the price would have been more cheaper as we are saying now. But there's always a trade-off. The government has to trade off the exchange rate cost to the fiscal. So in one way, government find a way to manage the exchange rate, but then also find a way to improve revenue mobilization by charging some the one city levy. So I think that the government generally has done well. But you know that in this country, fuel prices are influenced by three key things: the global demand and supply on the world market, the fiscal, that is the taxes. Then we have the exchange rate. So if we have exchange rate being managed well, and the process of demand on the global market is also in our favor, we should expect that the price of oil will be relatively stable. So it has been a very good year, and I hope that we are able to put in measures to sustain, especially the exchange rate. Because as for the prices, government can at every point in time do something about it. So if we're able to get the exchange rate side correct, we hope the relative stability in fuel prices will also support households and industries in their activities.
Interesting. But it also highlights the relevance of the Tema Oil Refinery in all of this. I know you have also, Ben, you have been vocal about getting the refinery to come back on stream. So far, what sense do you get about the refinery and how soon it's likely to get back on stream?
Mark, we must comment.
Yes, I think the refinery is showing symptoms of recovery or being able to work, although it's not to full capacity. But it's better, it's showing some signs. And we hope those who are managing it, will manage it well to the point where it will be at full capacity too. And the private refineries that we have, Central Refinery joined to the government one, will be able to process adequate fuel, to minimize the cost of refined fuel that we import into the country. So it's early days yet, but we can see signs that things can be better.
Interesting. Ben, your take on this?
I think that we must commend the new management at TOR for putting human resources in terms of technical resources and also certain financial resources to revamp, retool, and ensure that TOR begins to refine. Unfortunately I think the philosophy of government, especially the finance ministry, is not targeted at ensuring that TOR refines, because I was expecting that at least an allocation would have been made in the budget in terms of how TOR will be able to procure crude, because that is a major barrier in their quest to refine.
But we know that they were making efforts to sort of restructure, get some sort of private sector involvement in it. We know that was part of the things that Dr. Yusuf Sulemana was working on before he exits. I don't know how that has fared anyway.
Getting private sector will still be one of their core functions in terms of what we call tolling, which maybe they just get some service charge based on refining for private entity or private interest. But for them to be able to refine on their own, they need resources because then they may need about $100 million to start. So as a state, if we are too intentional and very specific in terms of retooling TOR, we must complement the activities of the current MD by allocating certain funds in the budget for him to be able to procure this crude and refine on our own. And the importance of the benefit of this is that instead of the tolling service, which gives them certain revenues, this one, refining on their own, they get the full benefit of the refinery. They get the tolling service itself, they get premiums on the output that they turn out to the market, and also ensure that there's that energy security in the country. And that even goes further to boost our exchange rate in terms of stabilizing the city. So I think that instead of private equity or private interest coming in to toll and then pay certain revenues to toll, the Ministry of Finance must allocate some monies in the maybe 2027 budget or the mid-year of 2026. We must be very intentional and very cautious that we want toll to work. And if you want it to work, we must complement the activities of the current MD and the current management of toll.
Well, Doc, you are a finance person. What do you make of this point from Ben on the fact that government should be more forward in its helping toll get back on track? Or how about leaving the other ideology that says leave it to manage its affairs, get the private sector involvement to help it revamp its operations? Where do you sit?
I think that state-owned enterprise cannot continue to make losses for government to be cleaning up the mess. You go to some of these state-owned enterprises, in spite of the losses, if you see the compensation to directors, you wonder, why should we compensate failure? Why should we compensate a company that is making losses? Even if you ask the directors themselves, if they were their personal businesses and the company is making losses, would they be paying themselves that high reward? So we need to have a very high KPI, and they should be held accountable to those KPIs. You know, if we need to run public enterprises with a private mindset. You know, it is in that we can be able to get value out of it. You know, so until we get to the point where directors are held accountable, but if we're unable to turn around the company, given this resources, given this period, you have to give way for somebody to come and take over. But you see, there's also a real challenge where they don't have a free hand to manage it. You go to some of these state-owned enterprises, and government appointees or government are pushing people to them who do not even have the skills to match up. So it also balloons their wage bill, which eats up their possible profit that they will make. So if government will hold them accountable, then government should also give them the free hand to run those state-owned enterprises, including toll. I'm sure that if they are given that freedom, they will be able to turn it around.
Okay, but the good thing is, at least beyond all of that, the government or the president, when he met with all the state-owned enterprises, as well as with SIGA, he stated emphatically that any SOE that wasn't living up to its mandate will have its heads axed. Basically, he was open to firing the heads of these institutions that aren't doing too well. We'll see how all of that pans out in the next couple of months, hopefully. But then, on the other hand, TOR had announced that it was going to commence operations in October. However, that didn't happen. It was quite disappointing.
It was, because I think, as I indicated earlier, they need resources, especially financial resources. I think on their part, they've tried to perform the various technical functions to ensure that the company or the company is fit to begin refining. But the challenge has been how to get crude. And I was suspecting, as I indicated earlier, there are two sources. Either the Ministry of Finance allocates some funds for them to procure the crude, because, since 2004, we've been paying what we call the toll debt recovery levy. It was infused in 2015 to the ESLA. The Ministry of Finance takes this money and doesn't allocate it to them. So whilst BOST is benefiting 12 pesos per litre, toll is expected to benefit 8 pesos per litre, yet it is not going. So when people say toll is being mismanaged or managers are mismanaging, it also means that there are certain financial obligations due them that were supposed to be funded by the state, but the state is not doing. So at any point in time, they need to pay certain debt which they have to get their own resources. So one, the minister must allocate 100. If the minister is not allocating, the other option is that the Minister of Energy and Green Transition must ensure that we redirect the product or our output from GMPC or output from the upstream to toll. And that is how it is done everywhere. You integrate your upstream to whether you call it midstream or maybe downstream. You integrate the upstream through the midstream to your downstream. And fortunate for us, Ghana plays a critical role in all these sectors. Ghana has GMPC, which lays product on our behalf. You can give it to Tor. Tor refines, sells it to Go Energy, or decides to even say we are selling it to the local OMCs, so that the OMCs will just buy direct from Tor, and because Tor is also a BDC anyway, so that the cost or the premiums on these products do not go higher. So I'm expecting that in the coming days, the Minister of Energy and Green Transition also says these organizations down and say, GMPC, stop selling products to Dangote, or stop selling products outside of Ghana. Redirect your products to Tor. Tor refines onto the local market so that we benefit at the boat, especially at this time that price of crude are very low on the international market. They are very low, so the cost of even transporting them and the premiums you are getting, you are not going to get them. So it's good you just integrate them into the market. Now, lastly, there's this argument that state-owned entities are not doing well. Yes, some are not doing well. But if you take SIGA reports, there are many of the state-owned entities that are also doing well.
But they are not the majority. That's unfortunate.
Most of them, maybe we have not. I think that the argument has always been that they are not doing so. We don't pay attention to them. For example, if we come to the energy sector, BOSS was doing well, right? We Power Authority was doing well. GRIPCO has been doing well. VRA has been doing well.
Is BOSS a good example to mention here? Because some have argued that it is sidestepping, it is stepping beyond its mandate. That's why it appears to be making money.
No, so apart from BOSS, VRA is doing well.
Okay.
We Power Authority is doing well. GRIPCO is doing well. So the only challenge in the power sector for us now is ECG. So sometimes we look at ECG and think that the state-owned entities are not doing well. Majority of them are doing well. And I think that if we support Tor will do better.
Okay, but Doc, I just want to find out from you before I come back to Ben on this. We understand that Ghana is exporting crude to Dangote's refinery. Really, what would it take, for instance, for us to swap that crude for finished products, and how would that translate into the impact on, for instance, our forex situation in the country?
You export any raw material outside the country, you are creating jobs for other people. So we know that we want to encourage the intra-regional trade, but I think that the challenges in Tor and the other local refining need to be addressed and be able to equip with the capacity to refine them. You know, the challenge with such an arrangement on our exchange rate or our forex activities is that it will always come back to have a negative impact. You will need so much to refine it, you know, bring it back to the country, and you are doing this at the cost of the dollar. This year, globally, the dollar have not done so well, so we can get away with it. But you see, I think that good times will help us plan for bad times, and that is what we usually fail to do. So now we have good time. It is also contributing the reason why some of the state-owned enterprises are making some profit, because generally, if the city is stronger, you know, your operational cost is down, then you're able to get some profit. But in the long term, what if things turn around? The dollar becomes stronger, then the city starts weakening. What are we going to do? And that is the question we need to address. And I'm sure if we put the adequate steps or plans in place, by the time, let's say the next 2 years, when general economic situation may turn. And I keep saying that if we look at the economic cycle of the country, every 4 years we go through some external or internally inflicted shock. We can go as far back as from 2000 to 2007, 2008. We can see that we have the global credit crunch that affected us seriously. Fast forward to after 2008, the economy did well. Remember the double-digit growth in the GDP around 2011. Then 2014 coming, we had internal shock from the doom saw that threw our fiscal management off balance. Then we find a way to tame it, and we came back to some level of stability. 2017 coming. Then we have we had COVID-19 coming in. So like for the next 3 years ahead of us, we will be experiencing general stability. That is the cycle of the Ghanaian economy. But then the bad time will come in, in the next 8 years, especially if the government wins power, it's the second term that things become difficult. So having this hindsight, it should guide us in our thinking and planning that good times will not always be there. So let's prepare for bad times by resourcing our refinery, enhancing its capacity to process, to be able to process the oil that we need here.
And we hope that government is listening and some practical solutions should be put in place to get toll back on track. But every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you'd always want to remember. That's star 770 hash. Yes, star 770 hash is the new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African bank, and proud sponsor of Business Focus as well as Telecel. We'll go for a quick break. When we come back, we'll bring you more. Don't go anywhere. Welcome back. This is Business Focus here on TV3 with me, Michael Obudu. Now to our next topic for today. As conversations around the Woya Lithium agreement heightens, policy analysts are unified in their call for government to place long-term economic considerations above political expediency or short-term commodity price fluctuations. Now, watchers of the lithium space want economic considerations to guide Ghana's decision on contracts at fiscal terms to maximize the benefits. The think tank Africa Policy Lens argues that the Woya project remains robustly profitable, maintaining margins exceeding 40%, even with the recent downturn in global lithium prices. Well, to help us with that conversation, our guest who's still with us, Dr. Eric Boakye-Iyadom. Doc, quite an interesting position from your outfit, but really, why are you against the reduction in the rate from 10 to 5%, especially when the price of the commodity has dropped quite significantly since that contract was signed in 2023? Dr. Boakye-Iyadom, if you can hear me. Well, we'll try and connect with him, but then I also have in studio with me Executive Director of the Center for Environmental Management and Sustainable Energy, CEMSE. Benjamin, where do you sit with all of this, really?
I sit with the people of Ghana, and I also sit with the people of Woya in the central region. I sit with the company that also wants to engage in this particular activity. I think that the cacophony around this topic has to do with a lot of challenges being faced in this particular country. First, I think that there's no mining philosophy in Ghana, and because of the lack of that philosophy, there has always been an inconsistent legal regime or fiscal regime in the mining sector. So if you take 2006, the fiscal regime was, especially for royalty, was around 5%. We amended the act. It was the 2006 was a threshold of 3 to 6%. In 2010, the 703 was amended to 794, and when it was amended, we made it fixed. Right, another inconsistency. In 2019, when we amended it, we even took off the fixed, and now maintain that we should now, the minister has that authority to prescribe. If the minister is not able to prescribe, then he falls on the 794. So that is a challenge in terms of the philosophy behind that particular sector. And in any sector, you need a threshold. There is a minimum threshold and there's a maximum threshold. That's why the 2006, which is a 703, had a threshold. Now we are here and we are discussing 5% or not 5%.
Yeah.
In the discussion, we must include the time lag. When there's a time lag, issues of cost change, issues of price change, issues of investment change, right? And any projection you do, especially in the mineral sector, must be based on your internal rate of returns of the company itself, as well as government benefits of royalty. You can also run net present value of the company in terms of the lifespan of the project, as well as the benefit government is going to drive from this project. And if you do some of these analysis, this sensitivity analysis or simulation, you realize that it is good that we allow the company at this initial stage, which is a new company, a new industry in Ghana, to begin with a 5%, and later, if you could, based on price, what I think Dr. Steve Mantia is projecting, what we call a sliding scale. If price jumps to certain threshold, then we also increase our royalty to that threshold. If you had done that in the gold sector, Ghana would have been making huge sums of resources today based on royalty, but we couldn't do that. So we should take a look at our Mining and Mineral Act, right? When you look at it carefully, draft a new royalty regime or a new fiscal regime that covers all the mining sector, not only lithium.
Fair point. Let's take a look at a video from Parliament where the bill was actually withdrawn by the majority side of Parliament because they think that it's important for us to have a broader stakeholder discussion before they go ahead with the bill. So let's take a look at that video and then we'll continue from here.
that the deal was being withdrawn for further consultations.
This was laid before the House on Tuesday, 11th November 2025, and was referred to the Committee on Lands and Natural Resources for consideration and to report to this House. Mr. Speaker, the reason for the withdrawal of this agreement is to enable the Ministry of Lands and Natural Resources to undertake further consultations with very relevant stakeholders prior to representing it to this very important House.
MP for Okankwe Central, Patrick Yaubuama, criticized government for rushing to put the deal before Parliament despite long-standing concerns.
We told you that you did not undertake wider consultation in this agreement that you brought. And you are now telling us that you've gone round to listen to prominent people, you've gone round to listen to CSOs because they are bashing you. You've gone round to listen to experts in the industry. What did you do in the first place? You didn't consult anybody. You came here and we told you that you brought a wrong agreement that was not in the best interest of Ghana. And you said you had the numbers. You pass it. We had our say. And you wanted your way. And you are back here to withdraw.
But Majority Leader Mahama Yariga shot back, insisting the withdrawal will rather ensure that the country gets a better deal when it is subsequently returned to the House.
Why are we withdrawing this agreement? We are withdrawing this agreement because there is a proposal coming back to this House for us to review generally the royalties for our natural resources. For instance, as we speak, gold prices have soared, they are very high, but we are still collecting very low rates of royalties. So the proposal is to change and structure our entire royalties regime to be pegged to world market prices of the minerals.
So that was the Majority Leader speaking there on the floor of Parliament about the need to review basically the royalty regime in the country to make sure that we are benefiting from it. But of course, this is on the back of the earlier concerns raised by some quarters on the reduction in the royalty from 10% to 5%. Dr. Eric Boakye-Adom, your outfit strongly kicked against that. But before you answer that, you react to, okay, let me just pick your thoughts then. Why are you against the reduction? Because realistically, lithium prices on the global front are not looking too good, especially over the last 2 years. Doc, if you can hear me. Well, we'll try and reconnect with Dr. Boakye-Adom, but we'll just put on your screens quickly for you a graph of how processed lithium is faring on the global front. That is lithium carbonate. As at 2023, around the time when Ghana signed the deal with Barari, the price was about $600,000. But as we speak at the moment, as at present price, it's at about $95,150. Perhaps this is part of the reasons why the majority side thinks that
yes, as I indicated earlier, so we look at the price. Prices are not the same. Two, we also need to look at the cost structure, right? The relaxation of the passing of this particular contract in the previous regime continues to incur certain costs on this particular company. So you have to look at that. Atlantic Legion continues to incur cost, even though they've not even started. Operationally, they are incurring because they are paying their staff. So the cost, or what we call the all-in sustaining cost that was used in 2023 will be different from the cost today. The capex use, operational cost use will be different. So the cost variation alone will not even get you or attract you the 10%. And anytime you're also passing a fiscal regime, you must put it into a format that ties into the larger market, especially in African market. Well, how much is Mali doing? How much is Namibia doing? Or what percentage is Namibia doing? What percentage is Zimbabwe doing? These are some of the major producers of lithium in Africa. Are they doing 10%? No, they are all doing the 5%. So based on the price of the product, based on the new cost increment of the project, I think that the 5% is something that will continue to attract new investors into our area. It is a new area. It is not a developed area. So in a new field or new sector, you need to have a very attractive fiscal regime that invites new investors into the space. But if you begin to go higher, comparing yourself to Chile, which is very far developed, comparing yourself to other countries, Western Australia, that is far developed, at the end of the day, because they are developed, the investors will shift from your sector, or what you call investor fatigue. They will move from Ghana to these areas, and you lose. So imagine we decide to say we want 10, and the Atlantic Lithium says that, okay, I will not do the 10 because I'm packing my bags and go. The jobs we are anticipating that these will be created will not be created, right? The revenues we are projecting will not be gotten. So I think that it is good for us to accept this 5% so that in that sliding scale based on price trend, we now adjust our royalties upward.
And of course, it will be disadvantageous on our part to attain investor fatigue on a product that has prices plummeting as it appears over the period. Doc, but where do you sit with this? I know you are against the reduction from 10 to 5%, but there's also the argument that the price of lithium carbonate has dropped significantly since 2023 till date. Why are you against the reduction? Hello, Doc. Dr. Eric Bachayadum, can you hear us, please? Okay, we're having a challenge connecting with him. We can't seem to hear him in studio. But Doctor, we'll try one more time. Dr. Eric Bachayadum, can you hear us?
Hear me?
I can hear you now. Fantastic. Please go on.
Beautiful. So just check the price of the lithium entry. The price on Shanghai metal market today, it is 1150. At the time the contract was entered into in 2023, the price was around 2,000. But the agreed price to be used according to the DFS, that's the definitive feasibility study. They use
Doc, hold on. Just to get what you are saying, you are saying that the price was at how much when? As at 2023, how much was it?
As at 2023, the price was around $2,000 per ton.
Okay, that's for the lithium ore. Is that it? For the ore?
The lithium ore. That is the agreement because it's no process. So that is the agreement that is what we are actually selling to them.
Sure.
Or they are going to mine like the gold ore. So, but the agreement fixed the price at 1,875. You know, the price agreement, it means that the government and the company in question, Parliamentary DV, have agreed. And if we look at the DFS that the company submitted, upon all these cost computations, the company said they are going to post NPV about $1.3 billion, $1.3 billion within the mine life. You know, let's look at the economic situation at the time. Ghana had gone through one of the worst time in its economic journey, and the city has appreciated, and the dollar was all-time high. Even in that, the company's all-sustaining cost was $675 per ton. So, fixing your operating cost, looking at the economic conditions at the time, I mean, it was agreed to fix the selling price around 1,875. So, per the company's projection, they were going to make some profit. It is true that lithium prices have gone down, but they have not gone down to the point of about equal to the operating cost of the business. The lowest lithium price we have ever recorded was in 2020 during the COVID. It came around $300 per ton. Although, and it has gone as high as $6,000 per ton. Although, generally it has gone down, but if you look at the price as we speak today, you can just check on the world market how much it's trading. So if you come to tell us that the price today is equivalent to operating cost, it does not really make sense. Why do you hold your operating cost to be constant over time? When economic conditions around Ghana have improved, when the city has appreciated close to 20%,
Okay.
I mean, and general economic stability are better now. You are holding your operating cost constant, and you are rather bringing the selling price down. It does not make business sense.
Doc,
and in any case,
unfortunately, that's what time will allow us for today's edition of the show. We'll have to continue this conversation another time. Maybe, hopefully, bring you in studio so that we can walk through the numbers critically and get to the bottom of all of this. But before we leave you, every day people face different emergencies: police emergency, fire emergency, medical emergency, but you name it. Many Ghanaians do not know their emergency numbers, but here's one you would always want to remember: *770#. Now, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsor of Business Focus, as well as Telecel. A special thank you to my guest in studio with me, Benjamin. I almost said doctor. Maybe you should get your PhD. Benjamin is here. He's the Executive Director of the Africa for the Center for Environmental Management and Sustainable Energy, SEMSE. I also had with me Africa Policy Lens Senior Research Fellow, Dr. Ibuache Yadum, joining us via phone. Thank you so much for tuning in. We'll catch you same time next week. As always, please stay safe.
Business Focus is brought to you by EcoBank, Telecel,